Good morning, everybody. It's Chris from Serene Education with your 4 majors names update for the 20th of September 2013. Hi guys, end of week. Been a very, very strong week for all the majors in particular, or anything across the US dollar. In fact, FOMC sprung the surprise of the year so far and caught everybody with their pants down, literally. But what it has seen is seen price moving, especially for euro, sterling, anything across the US dollar, in fact, to the upside. We've seen a lot of resistance levels being broken. We've seen a lot of support levels being broken. And now this could potentially lay the foundations, or lay the foundations for things to come for the foreseeable future. And doing so, broken in here, looking at the US dollar on the daily, you can quite clearly see that we had a major resistance level at a certain point here on the chart. We saw the highs in June, early June. We saw another high, a reattempt of the same high, current high, through the latter part of July, going into August. Yet again through August, a number of attempts to the upside through August. August was quite a strong month in terms of trying to break that resistance pressure. Failing to do so, the tweeze at top here, and then the exhaustion coming through. However, euro gaining strength yet again through the early parts of September, and sure enough, FOMC meeting statement results came through, and bang, we had that massive bullish engulfing candle that came through. And what it's done is it's broken this major resistance level that we've had for a number of months, but also broken above the weekly fib. So very, very strong indication that price should be looking upside. You can see that my indicator box is primarily long term, looking very, very healthy. My intraday scenario at the moment now is one of consolidation, and the R-squared is complementing that negativity as indecisive. So I know it's primarily just consolidation after this very bull run. Yesterday's candle taking a bit of a breather after a very, very strong end to the day on Wednesday. So we end up with a spinning top. However, it's still above the major weekly support and resistance, or the fib level here at the 50% line. So this will constitute to my intraday support. So as long as price trends above that, then it's still very much in a very bull uptrend. So you can see my RMI, which is trend relating, is all positive, and my MA down here at the bottom, which was plotting my institution moving average, is all positive bar the 5 minute, which is irrelevant. And you can see that the overall sentiment was still very, very long. So all I'm looking for now, if you are looking to trade this, is obviously a trade of the current or yesterday's high. So we drop down to our 4 hour. We should get a bar signal. There we go. We get the bar signal loud and clear. And you can quite clearly see, if I just move the chart, you can see that after the massive move on Wednesday, we did get buying pressure coming through the Asian session. But going into yesterday, in fact, we saw price stalling. Some not so great news for euro in particular, but more so positive news for the US market yesterday afternoon, in fact. And what it's done is we've seen euro consolidating now, 1 or 2 engulfing candles, but consolidating at the top of the trend. So RMI is still well below, above, MACD clearly above, and we are above that weekly higher in the shape of the 50% line. So as long as it stays above that, happy days, perfect. You can quite clearly see that prices are making higher swings. If I use this channel just to show you, so swing high, swing high, swing high, you notice the top end was a resistance, high, resistance, resistance. So now you could actually use this breakout of this prior trend high. So now this area around here could be where we should be looking for support, if it makes any sense. You can also, therefore, if you want to look, this is the start of the uptrend, use the bottom of this to the current high, and you can see that my 23.6 level here has been a significant support. Was support yesterday. So what you can see, if I do my 23.6 fib retracement, now my 4 hour time frame, you can see that if price stays above this level around here, then ultimately what we could see is a kick higher after the major pull, the breakout, the consolidation, and then the bounce higher. The stronger the move, the less of a pullback you want to see. So 23.6, 38 to a maximum. When it starts getting down to 50%, yes, 50% is the ultimate, but past 50, then you expect a further stronger pullback, where there's not a lot of confirmation in that candle. What we don't want to see is a very negative day today, because what will happen is you end up with a very long wick to the upside and more sentiment at the bottom of the candle, which then represents a shooting star on a weekly chart. And if you're getting a shooting star on a weekly chart at a major support and resistance level high, that constitutes that this is going to be bearish long term. So If the FOMC statement news was great, we want that bullishness to maintain higher, so we can stay above the 50% on the weekly. But if I, just get rid of this. If price can stay above this 23.6 here, at the top end, find support above here, take a bit of a breather this morning. What have we got this morning? We got the German president speaking. Other than that, nothing else. We only have we have FOMC members, George speaking, and we have a member, Bullard, speaking this afternoon. Between them, we've got CAD core CPI month-to-month results and CAD CPI month-to-month results. So, not much today. Still waters run deep. End of week. Could be more profit taking today as we head into the weekend. However, if that momentum, if price can actually close higher today, then we're going to see great things for the following week. So consolidation above the 23.6 here in particular, we're looking at roughly the 1351.44 and change mark. If we can stay above there today, then we could potentially see prices moving higher into the new week. So consolidation above here, above this resistance trend at the top. Negative intraday at the moment now. This is just a pullback after a massive move to the upside. Get that confirmation coming through again. Nice bullish engulfing candle closed on the 4 hour. Over here, supporting. Nice thrust to the upside. And then we can start tackling the long-term 61.8 on the weekly for the foreseeable, for next week in particular. So a nice juicy target for the remainder of next week or the future, as long as we get above this consolidation high here. And we're looking at a healthy 260 pips. So patience is a virtue. Make sure that 22.6 level intraday, go to my my hourly just to show you support level here in my intraday. Here at the 1351.85 mark, you can go for that level if you really want to. As long as it stays above this upper trend here. Overall, if it stays above the 50% of the weekly, it's still positive. Okay. Move on to sterling. Now you can see quite clearly moving above, very, very sharply moving above the weekly 78.6. Well extended upside. And yesterday's retail figures really took away half that momentum that we saw. And what happened was, I did mention to expect the sterling to pull back to that 78.6 level, and sure enough, exactly what you did. Yesterday, there was a good opportunity to actually make some money on the pullback, and there was a healthy 90-odd pips and change to that level. So it remains. I mean, the overall sentiment long term is very, very positive. You can quite clearly see that. I did mention with any breakout, you're going to get a pullback, breakout, pullback. Saw a breakout, pullback. Same thing over here, breakout, the pullback, and then the continuation. Here, just a breakout above the weekly, the pullback, and you can see it on the Asian session. Prices are finding a bit of support here above the 78.6. This has to be our intraday level of support. That 78.6 here level, which is at, if I can just find it now, is 1601.44. So make it 1600, nice round number. That level will maintain. If price can maintain above that level, then obviously this is just a consolidation pullback. The retail figures really got in the way, so be it. But the overall sentiment still is one of upside positiveness. Clear indication on that. RMO very much trending. Institutional moving average is blue across the board, so we know that center. And the R squared is complementing that. So I know it's, and the linear regression too is also complementing it. So I've got 4 big boys in this actual indicator box, really confirming this is a very strong uptrend. Perfect. So we just look for the consolidation pullbacks, and then we buy on those pullbacks. Okay, simple as that. So as long as it maintains over the weekly 78.6, this is still very much in an uptrend. So look at the 4 hour time frame. The only thing on the 4 hour we didn't get a buy signal is the MACD is below. There it is, below, because it's consolidative. It's still consolidative nonetheless, but above the weekly. So fantastic. If you look at the time frame, if you look at the overall trend for this particular pair, still making swing high, swing high, swing high, swing high, swing high, swing high, swing high. And if you draw the trend line up to this level here, you can quite clearly see that if price maintains in this level here, we could always end up seeing price moving higher. RMO, very much upside. Yes, not making higher histograms, but consolidative nonetheless. It's going to happen. On the pullbacks, you can see the histograms falling, and the MACD is going to complement that. At the moment now, pullback, but it's positive because it's above the 0. Here it's below, and it's red. So if this is to be a genuine sell in this case, we've got the red arrow. Candles need to be red. The RMO needs to be below the 0, and the MACD needs to remain below the 0. Here is the one that's in the way, and that's in the way. So therefore, no true selling, just a consolidation pullback in an overall upside trend, bull trend. Okay, so as long as it maintains it above the 78.6, expect prices to move higher yet again. As long as it stays above that level, let's see if we can target back up to the current high, the highs that we saw after the FOMC statement meeting. There's a good healthy 89 pips to that level, guys. Sterling this morning, we've got public sector net borrowing figures coming out at 9:30 a.m. GMT. And the borrowing figures are a lot more positive than the previous figure. The previous figure was negative 1.6 billion. They're expecting a forecast of 11.9, guys. That's a huge difference. And if it comes out anywhere near that, or anything higher than negative 1.6, it's still going to be positive. They're expecting a hell of a positive move from those outcomes. So if it comes out that anything higher than negative 1.6 in the positive range, it's still going to be very good for sterling. If it comes out higher than 11.9, expect some really, really good growth for sterling over the going into the new week in particular. US dollar Swiss franc, seeing US dollar losing ground against euro and sterling, you would expect it to be losing ground against the Swiss franc. And sure enough, FOMC, that massive statement outcome, pushing price lower in this consolidation level here. A lot of support through June, a lot of support through August in particular. It's very much mirroring what the euro does. And sure enough, bearish engulfing closed lower. Bit of consolidation. However, you can quite clearly see a very mixed signal box on this chart. You can see that the overall sentiment is one of negativity, but the R-squared isn't really complementing a lot of that at the moment now. Bit of positiveness on our shorter term 5, 15, 30 minutes is because we've been consolidative. Yesterday in particular, very short, small range, a lot of profit taking probably, potentially, but it's still below the major support and resistance level, still below a major weekly, still below the monthly fib, so and then the institutional on our daily. So a lot of negativity on this particular pair. Swing lows, if I drop down to a 4-hour time frame, you see exactly that. Get a sell signal on my chart. There we go. Highest highs, swing low, swing low, swing low, break below the weekly, break below the institution, break below all my other moving averages, break the consolidation support level on that bearish engulfing, and it's moved lower. RMO below, MACD below, so everything's looking negative, and we're just seeing consolidation. So if you're looking for an opportunity to trade this anytime soon, would need to see a break of the consolidation support levels that we're seeing here at 90 and change. So get below this area here, and then you could target back down to our monthly and weekly fib, which actually complements each other, which is a healthy 253 pips from that support break. Okay, so patience is a virtue. Put in a trigger alert here, wait for that bearish engulfing candle to present itself, and then look for entries, stop management, etc., and then just pull the trigger. The other scenario would happen is price continues to find support here. Price would likely move back to the underside of a price support and resistance breakout. So we take the highs over here from that sell off, and you can quite clearly see that my 38.2 mirrors that major support and resistance level here. So you get a nice 4-hour bullish engulfing candle here, then we could potentially be looking for a small return on a potential pullback trade of only 25 pips. I don't really like doing them because the overall market really is negative. Trading against the market trend, you put a lot of risk in your in your favor, which is not what we want to be doing. We put more profit in our favor. So I don't really like trading pullbacks, and if I do, there has to be enough in the tank in order to be profitable from it, and I'm very aggressive with my entry stops and targets. In, out, that's it, because I don't want to risk trading against the overall market trend. US dollar Japanese yen, very interesting one. We saw a lot of sell-off FOMC statement meetings, and then yesterday we saw a lot of positive news for the US dollar, which really, yet again, on the institutional on our daily, has come through and supported price to the upside. Selling into it very aggressively, then the bounce. Selling yet aggressively yet again into it through latter part of August, and then the bounce. Here again, selling into the institution moving average on our daily, and then positive news for the outcome on the US dollar yesterday, and we saw the bounce. And bouncing back up above the price. So almost forming a tweezer bottom now, because it's clearly broken above the swing low. Wednesday's news really forming the swing low, and Thursday's news pretty much taking all away and breaking, closing higher. So this forms a tweezer bottom now at the trend. You can see it's been trending lower, small trend. So now heading back up to, if anything, back up to the monthly fib. And if you look at the trend at the moment now, pretty much on it. It's very, very close. There's a lot of risk over here to that level. There's 39 pips. It can be made, don't get me wrong, but it's, whoa, the bandwidth of here is very, very tight. We've seen a lot of spec. You can see the trading range within this. If I drop down to a 4-hour time frame, oops, it's going to a monthly instead. Let's get that 4-hour time frame up. You can see, look at that range within this range. It's very, very skittish. Oh, you're putting a lot of risk over here. Yes, you're target, there's 40 odd pips to be made, but you're carrying twice as much risk in terms of stop management. It's not really worth it. If we got above the monthly, totally different scenario, because then it starts looking positive long term for the US dollar against the yen. And if you look at the overall sentiment over here on the action indicator box, mixed signals on our weekly, daily, but the RMO is bar the 4-hour and the daily. The RMO is very much trend related, and the moving average, institution moving average, is also positive across the board. We have been trading in a consolidative range, but as long as the US dollar is still making high highs and still trading above the institution on the daily, it's still overall going to be positive. The US dollar will still want to look for positive against the yen, and surely that's what we're seeing. So it's imperative that price maintains. We've seen a lot of consolidation now over the 20 hours for the US dollar against the Japanese yen above the prior swing low, the swing. Okay, this you can see before then, that was a trend for this particular pair. Excuse me. Swing low, breakout. Now it's fine and above this level now, and now it needs to kick on. You can see a lot of buying coming through here, but the overall candle setup, everything on the 4-hour is still one of negativity. However, the institution is below price, so it's positive. Even though it's negative, it's still one of positive. This is just a pullback. As long as it stays above this 99.28 or 68 level here, and we get a nice bullish engulfing candle close on this 4-hour candle, there's another 55 minutes to wait for that. If it closes above this range, target near term very aggressively into the monthly fib, which is not too far away, to be honest with you. So you're putting a lot of it. So if you wanted to, it's there. Not saying you should do it, but if you are more the aggressive top, then there's always that to be made. The other scenario would be a bearish engulfing candle closed lower. You can see there's a lot more wicks to the upside, a lot more sentiment on the downside of these candles. If she closes lower again than the swing, then ultimately we're going to start looking back down towards the institution moving average near term. So this particular pair, I haven't traded yet. It's far too wicky for me. I like to, if this is to be genuine, I like to get above the monthly here, and then I'll start looking upside. If not, get below the institution moving average, then I'll start looking for further negativity to the downside. That's it, guys. Remember, end of week, so we could see a lot more consolidation or people closing their accounts or their positions or pulling up their stops to maximize the returns as we go into a weekend. So be aware of that. Not a hell of a lot of news out today, so still waters run deep. We do finish the day off with the FOMC members speaking, so that could lead into a lot of what Bernanke was probably talking about earlier on Wednesday. That could help. We got news out for CAD, so anybody who's trading Canadian, trading the loonie today, please be aware of the core CPI month-on-month figures coming out for that particular pair. As I mentioned, 9:30 this morning GMT, we have public sector net borrowing figures for sterling. That looks like a healthy figure. So if you're trading sterling US or euro sterling or sterling yen, look to see what happens on the outcome of that, because we could see some further movement for sterling. And if it's positive, as they say it is likely to be, wow, then we could see a nice return. We have seen lots of returns from sterling, some fantastic figures for sterling, and this could really do well for it. And then we have for Euro, the only mention for Europe is the 12:30 p.m. or 12 noon news announcement for President Weidemann speaking, German, Baba President. He's going to be talking this afternoon at noon. So that's it, guys. Although if you're trading this particular template, please back it up with sound money management rules. Follow the simple rules of the template, guys. It's amazing. All you got to do is just back it up with sound money management rule. And then you have something that really works. Keep your trading very mechanical if you can. Try and take as much emotion out of trading as possible. It's very hard to do so, but you have to trade very mechanically these days. Leave that emotion behind you. Put in the top drawer. Just get rid of it. Clear your mind when you sit down at your trading desk and look at the charts very as a mechanical approach, and you'll find you'll be a lot more profitable. Other than that, I hope you have a fantastic weekend with family and friends, and I'll catch you first thing on Monday morning. Until then, you guys trade serenely.